Hey there everyone, welcome into week 33. So almost I think two-thirds of the year have gone by and we are happy to bring you the analysis for this week. Before I get started, I would like to take an opportunity to reflect on the trades that we did last week. So one of the trades that we put out was this CAD yen opportunity, and this was something that I posted on TradingView. So you would be able to see that we called the turning point very accurately based off on a pattern. So the good thing about TradingView is that it really remembers exactly where you place your trade. So we said that the turning point was around 78, 60 something. You could see that there was a bit of a pause here, a bit of a double top, and then it fell on Friday night. So you might be wondering how far we want to hold this trade for. And I'll just switch back to our trades over here. Now, what you would see is that we've drawn this 45-degree line. Okay, and this is something that we use to ensure the trade does not go against us and we get out right on time. So we draw this 45-degree line from the top, and once this line is violated, we will exit the trade. So I'm not sure what's going to happen. This seems to be a key resistance that was met last week, and now we are seeing that okay, it's going to get resisted again. It may continue to go up. If so, we would look to close this trade maybe with about 20 to 30 pips. Not too great, but it's something that you have to learn to make sure that your profits do not go back to break even, and in a worst case scenario it doesn't make a result in a loss. So in this particular case, we've already switched it to break even, and we are hopeful that this guy would drop further. What are we looking for? So in the long run, I'm just hoping that this guy would fall down to test a shark pattern that's being created almost at the low. So how low is this? We are looking at around 76.50, which is a long way off, but it's something that if this trade goes all the way down there, it's going to be a very good ride. So at the moment we are being patient. We've got all our steps in place, which means that if this line is violated, we will be out of the trade and we will no longer be interested in this. Or maybe we could potentially wait for another pattern to form here and look to see if we can short this again, because this is the high of last week, which is something that is very interesting to us, because we generally feel that any harmonic pattern that comes along this region would be a good short as well. Okay, so the other pair that I'm looking at is the Canadian Swiss. Now if I go back to my trading view, I've just said that there are two reasons to short this guy. One is a shark pattern on the bigger time frame, and the other one is a deep crab pattern that is just forming. So let's take a look at what this shark pattern looks like. We generally draw our patterns from a weekly high to the lowest point, and then we try to find confluence around the 886 level. You could see that it's being tested. It's about to get triggered, or it's almost triggered. So I'm very ready to take this trade. And along with this, there is also what you call a deep crab pattern. Now this is something that's pretty new to most people. So let me just try to draw this very quickly for you. So it involves a crab kind of a setup, but you need to see this at the 886, and you need to see a 1618 extension from here, which is around this. You can see it up here, this 36 level, and also more confluence here. So this is very nice confluence at the 7538 area. Let me draw one more line, and this is absolutely perfect confluence. So I'm pretty excited if it goes up to this level to get into a short position. We are about 10 pips away, and this is something that I'm pretty keen on. Let's see if there are good weekly levels around here. well, the good thing is that it was the high of the previous week, and also we have another line that I've marked out, which was from a previous month's high or low. So which means there is good resistance here. There are two patterns coming in, so I'll be pretty keen on exploring this trade in on Monday. Okay, so let's take a look at the next one, which is Euro Swiss. Now Euro Swiss, it was a bit frustrating for us because we knew that there was a short around here. We were waiting for this to go up about another 10 pips to pull the trigger. It just turned on a dime around here. And now what we're looking for is our second opportunity to go short on this guy. You could see that it's already forming a very nice pattern. It's gotten a fib 6 retracement, which means it's a Gartley pattern. And I see very nice confluence and looks like at a very strong level to short this pair again. Now remember, this is a bit of a slow pair, so you've got to be patient, but as long as it makes the pips, you shouldn't complain too much. So the zone that we're looking at is around the 910 to 915 zone. Looks like a good shot. I would put my stop losses, well, this is one level to go above, and to be certain I'll go above this level as well. So roughly about 35 pips. And while I'm just talking to you, I see that there is a bigger pattern that's forming here, which seems to be a bullish pattern that we could look to take profit. So assuming that this guy starts going up all the way to the top here. So if we assume that this guy is able to go somewhere around here, maybe we are looking at a bad pattern to buy around here. So we are looking for about 100 pip profit with about a 30 pip stop loss. So all in all, a good risk to reward. I'll be keeping a keen eye on this. But remember, you can't short Euro Swiss as well as CAD Swiss at the same time because they are correlated. It's good that you go and check the correlation, but our general rule is that we will not take two of the same trades. So what could potentially happen is that CAD Swiss would be the first shot, and after that you'll have an opportunity. If you can switch this to break even, then you can consider Euro Swiss as the next shot. Okay, so that's good trade management rules so that you don't get caught up with the two losses in case it goes against you. That's a double exposure. Okay, up next we have the Aussie dollar. Now the Aussie has been putting in some amazing strength, and then there was a sudden drop last week. Okay, but I'm still inclined to say that this is on an uptrend. Why would I say so? Because you see a higher high, higher low, and it just keeps going up. This seems to be a higher high. This almost seems to be like a higher low in the making. So what I'm looking for is a bad pattern that's coming up. Now, how do you know what it's a bad pattern? You would just draw a Fibonacci from the lowest point to the highest point and look for a Fib 5 retracement, which is over here. And you could see that there is a very, very nice confluence at 76.15. And if I bring in my Fibonacci expansion, you would kind of see that it's the same situation. Yep, brilliant. It's just absolutely overlap perfectly. Now the other good thing is that if you draw a line along here, you would notice that this aligns perfectly with some of the other weekly highs that we've been tracking. So you would see that there is resistance here, which should turn to support when this guy comes back down. So overall, a very, very good trade to look out for. The only downside to this is that maybe it's the second leg of the trade is forming a bit too fast. So based on our rules, this is happening a bit too fast. We need to wait for this. So I'm not going to take this on the Monday. I'm going to wait for it at least to come in around, well, I would say the 16th, which is the Tuesday. You could see that it's moving down pretty quickly, but yeah, I wouldn't be too keen on this. I'll at least, if it hits here, I'm going to wait for consolidation and then take it, because we need to see some symmetry around this. And what I mean by symmetry is you've got to see that your triangles are kind of equal in size. Now what if this happens? You see that this guy took almost, let's say, 30 bars to form. This formed in like 20 bars or maybe 15. So that's not good. You need it to be balanced out to show that, okay, there is similar interest for the sellers here as well as much as the buyers. So it needs to take the same amount of time to form. Okay, so does that make sense? It's something that we share during our course, our patterns into profit course, in terms of picking out good harmonic patterns. All right, so these are the three pairs that I'm really looking out for. I haven't really seen any other good patterns coming up, which is fine. I'm sure middle of the week we'll see a few more forming up. And just to let you guys know what we've been up to, if I just go to our events, the first thing you could do is, if you're really looking for a start in trading, this class is ideal for you. The practical technical analysis is a full day class. You need to pay $51 for registration because we want to make sure that because we're printing material and we are also getting a venue, that the attendee shows up. But the great thing is that after the class and after you meet terms and conditions for trading, which is placing 10 trades, you would be able to get back $150. So yes, it means that you'll be earning $99 from this class. And we introduced the box theory yesterday, which was really something what you would see over here. Why do we draw boxes on a weekly basis? It is got to do with the fact that we are trying to look for turning points on the market at the previous week's low and high. So it was a good session of sharing for our new attendees, and they really benefited from this. So if you're interested, you should sign up for this, and of course it's the only class in Singapore that pays you to attend. Also on Thursday, we're going to have our sharing session on harmonic patterns. This is also something really good where you would really learn about harmonic patterns and why we continue to use this year after year. Both of these are going to be held at IG. So IG is in Raffles Place in Singapore. Very simple to find, just next to the Raffles MRT. And of course, if you don't feel like going out of the house and you just want to stay home, do join us on Wednesday night. We're going to have a live trading session with us. We'll reflect upon all the trades that we've taken, and the good, the bad, the ugly. Everything will be discussed, and of course there'll be more sharing on our trading strategies as well. So 3 good events for you to attend if you're a budding trader or if you're a seasoned trader. I'm sure it'll be very beneficial to you. All right, so with that, I'm going to wrap up this session. I wish you all the best for this trading week. Remember to keep your stop loss in place. That is something that we drilled into folks yesterday when we had our first practical technical analysis. Don't put all your money on one particular trade. Okay, so we'll catch up with you next week. Have a great week and talk to you soon.